Hello, friends. Today we are going to learn about how to start Forex trading with as little as $100. To start Forex trading with as little as $100, you need a structured approach that involves understanding the fundamentals of the Forex market, managing risk, and utilizing appropriate trading strategies. To know what is Forex trading and its fundamentals, watch the video from the link in the description. Setting up to trade with $100. Choosing the right broker. Look for brokers that offer low minimum deposits, micro or nano accounts, and high leverage. Ensure they are regulated by financial authorities. For example, FCA, SEC, ASIC. Key considerations. Leverage options. High leverage allows you to trade larger positions but increases risk. Commission and spreads. Choose brokers with low spreads and reasonable commissions to ensure trading costs don't eat into your small capital. Opening a trading account. Micro or nano accounts are designed for small capital traders, allowing you to trade small positions with less risk. Account types. Demo account. Practice trading without risking real money. Live account. Once confident, move to live trading with your $100. When it comes to Forex trading, choosing the right application is key to a smooth and profitable experience. The best Forex trading apps provide a combination of reliability, ease of use, advanced charting tools, and comprehensive market analysis. Here are some of the most popular and highly recommended Forex trading applications. 1. MetaTrader 4, MT4. Best for beginners to advanced traders. Extensive charting and technical analysis tools. Customizable indicators and expert advisors. EAs. Access to automated trading and backtesting. Large community support and downloadable plugins. Available on desktop and mobile. Pros. User-friendly, robust features, widely adopted, great for technical traders. Cons. Limited to technical analysis, lacks more advanced tools compared to MT5. 2. MetaTrader 5, MT5. Best for intermediate to advanced traders. More timeframes and order types than MT4. Improved charting and technical analysis tools. Economic calendar integration. Supports additional asset classes beyond Forex stocks, commodities, etc. Pros. More advanced features than MT4. Supports multi-asset trading. Built-in economic calendar. Cons. Steeper learning curve. Fewer brokers support it compared to MT4. 3. CTrader. Best for intermediate traders who prefer a modern interface. Excellent charting tools with multiple timeframes. Algorithmic trading with CAlgo. One-click trading feature. Market depth visualization. Pros, sleek user interface. Fast order execution. Advanced trading tools. Cons. Fewer brokers support it compared to MetaTrader. Risk management. Position sizing. With $100, trades should be small. For example, risking only 1 to 2% of your capital per trade. $1 to $2 per trade. Stop-loss orders. Automatically closes a trade at a predetermined level to limit losses. Take profit orders. Automatically closes a trade once a profit target is reached. Leveraging and margin in Forex trading. How leverage works? Leverage amplifies potential gains and losses by allowing you to trade larger positions with a smaller amount of capital. Example, with a leverage ratio of 1 to 100, you can control $10,000 with just $100. Risks of high leverage. While high leverage can increase profits, it can also lead to significant losses if the market moves against your position. Margin calls occur when your account equity falls below the required margin level, forcing you to deposit more funds or close your position. Managing risk with a $100 account. Risk-reward ratio. Aim for trades with a favorable risk-reward ratio, for example, 1 to 2 or 1 to 3, to ensure that your potential profits outweigh potential losses. Diversification. Don't put all your capital into one trade. Spread it across different trades or currency pairs to minimize risk. Emotional control. Trading with a small account can lead to emotional decision-making. Stick to your strategy and avoid emotional reactions to short-term losses. Psychology of trading small accounts. Overtrading. With a small account, there is a temptation to overtrade in an attempt to grow the account quickly. This increases exposure to risk. Patience and discipline. Consistency is key. Small, steady gains are better than chasing large profits with high risk. Avoiding greed. With a $100 account, don't aim for unrealistic returns. Set achievable goals. For example, aiming to grow your account by 1 to 2% per week. Monitoring and improving your trading. Keeping a trading journal. Track all trades, including entry-exit points, strategy used, and results. Review regularly to identify patterns and improve your approach. Learning from mistakes. Small losses can be learning opportunities. Evaluate what went wrong and how to avoid similar mistakes in the future. Continuous education. Stay updated with market news, trends, and new strategies. Use resources like Forex courses, webinars, and books to improve your trading skills. Building long-term success with a small account. Compounding profits. Over time, reinvesting profits back into your trading account allows for compound growth. Example, earning 2% a week on $100 can compound to significant returns over months or years if consistently applied. Scaling up. As your trading skills improve and your account grows, you can gradually increase your position sizes and diversify your strategies. Starting Forex trading with $100 is feasible if approached with proper risk management, discipline, and a clear strategy. With patience and learning, a small account can grow steadily over time. Make sure you like this video and subscribe the channel before you go. Thanks for watching.